This is Oliver Slope with Blue Line Futures coming to you from the floor of the CME here in Chicago with your grain market update. And we are seeing the selling accelerate here today. We failed against technical resistance 390 to 392, and we were going into that all-important signing of the Phase 1 deal, and that did fall flat. And this is something we've been talking about in our morning reports throughout the first half of this week. This was largely priced in and kind of set the tone for the potential of a deal that was overpromising and under-delivering, and that Phase 1 deal seemed to under-deliver, and so you're seeing the selling kind of pick up here. We're at the bottom end of the range, which I think might represent a decent buying opportunity on the first test, but you need to see this support pocket hold through the rest of the week. That comes in about 377 to 380. A break and close below here could potentially take us towards contract lows of 365 and 3/4 for that March contract. One thing we're also keeping a close eye on, next week's option expiration. There was a boatload of open interest at the 390 calls. That was likely keeping a lid on things. On the support side, there's a lot of open interest in 380, 385 puts, which could help provide a little bit of support here near term. Now, moving over to the soybean market, 937 and 940. This was previous support for about the last 9 sessions. We finally broke down below it yesterday on the back of the lackluster Phase 1 deal. That opened the door for accelerated selling pressure, taking us down to 920 to 922, which is a support pocket we've laid out for several weeks now. This represents the December 15th gap, a key Fibonacci retracement in the 100-day moving average. This is a must-hold area as well. Break and close below here takes us down to 912. At that point, I think there might be value to the buy side. Now, moving past the technicals and money flow situation, the fundamental catalyst that we're keeping an eye on here very near term is South America weather. That certainly is not helping stabilize prices, as weather looks pretty good for crops down there. Wrapping things up with the wheat market. Wheat, Chicago, we've been talking about that double top high back from June, 573 to 575. We tried to poke stops above there, traded out above it yesterday, but couldn't get any conviction on the buy side to sustain that momentum. So we're seeing the market back off a little bit here today. If we see the market break down below support, 557 to 560, I wouldn't be surprised to see long liquidation from the funds, accelerate the selling pressure, and potentially mark a longer term top. So that's what we're looking at. That's what you should be looking at too. This has been Oliver Slope with Blue Line Futures from the floor of the CME.